Welcome to Barenaked Money, the podcast where we strip down the complex world of finance to its bare essentials, with your hosts Josh Sheluk and Colin White, portfolio managers with Verecan Capital Management, Inc.
Welcome back to Barenaked Money. Josh and Colin coming at you, the OG. And we are sitting here today very excitedly with trepidation going to, correct me where I'm wrong here, Josh. We're going to evaluate last year's year ahead look and also look ahead. Which one are we going to do first?
Well, yeah, these are going to be two separate podcasts. As we usually do, we're going to evaluate last year's predictions and all the stupid stuff I predicted 12 months ago. And next podcast, we'll tease it now. We're going to do our stupid predictions for 2025. Some of them will be smart. Some of them will be smart. They'll all be thoughtful, but some of them will also be ridiculous.
I'm aiming for thought-provoking, things to make you go, huh?
Yes, that without a doubt, we will nail that for sure.
All right, so we're going to concentrate for the time being on what we said last year, and you, as always, have prepared your list. I'm excited to see where your list starts.
So going back to our podcast that was recorded about 12 months ago, here's what we predicted for 2024. So the first thing was that Canadian inflation would be under 2% at some point during 2024. Ooh. And I can say this was a pretty bold claim, I think, at the time. Most people probably wouldn't have supported this claim, but without a doubt, this has been absolutely nailed because we're running on several months now where inflation is under that 2% level. And even the most recent reading, even core inflation is under the 2% level. So big pats on the back for this claim.
Well, just to be clear, this isn't the inflation that excludes everything except for one thing, just to get the number under 2%. Like, this is the inflation number that includes everything, like that inflation number. All right, big flaming gold check mark. Big flaming gold check mark. Interestingly, I want your take on this, Josh. I have not really seen the Bank of Canada up thumping its chest about, look how great we are, we killed inflation. Like, that hasn't really been a narrative as I feared or expected it was going to happen this year. I have not really heard them be that boastful. Is that accurate in what you've been reading as well?
I think that's a fair statement. And maybe part of that is because now they're dealing with growth issues. So nothing's ever perfect. Yeah,
you're the next worry.
Exactly. You go just from one worry to the next, and it seems to have transitioned pretty quickly. Several months ago, it was like, okay, inflation is no longer a problem, but growth is a problem. So now we need to try to tackle that issue. So yeah, it's nice that they didn't pat themselves on the back, because I don't think you want to be too congratulatory to oneself in this situation. But I think central banks have done a reasonable job of addressing this over the past few years.
Yeah, and we went through that brief period where the commentary was on where wage inflation was going to spike because the wage increases were picking up. So for about 6 minutes in the middle of the year, there was this whole fear that the wage growth catching up to where inflation had been was going to spur inflation on further. That didn't really seem to get any traction at all during the year, or if it did, it certainly didn't create a spiral that was out of control.
Yeah. So moving on here, the second prediction was that short-term real estate would be okay. And that longer term, which we don't know at this point, that real estate would be kind of just okay, kind of middling type of performance. So if you look at the numbers, real estate's been sort of flat throughout 2024, just in aggregate. Obviously, different pockets are going to say different things, but this is residential real estate, been roughly flat in aggregate in Canada over the course of the year. So I'd say that first part is reasonably true, reasonably accurate. Real estate has been okay. And it quite frankly, for me, it's held up better than I would have expected. If you had told me interest rates are going to go up 500 basis points over the course of 12 months, what's going to happen to real estate, I probably would have expected 2 years ago that, yeah, we're probably going to have more challenges than we've actually had.
Yeah, and I think some of that is in the price discovery in that market. It's a slow moving market. So, there's the supply is pretty elastic. So I think that that's absorbed some of that. But I also think that we're talking specifically about residential real estate.
Yeah.
I am hearing more stories about, REITs trying to unload properties and, unprofitable stuff in the office space and or retail space. I think that area is still being hit. So if you look at it with a broader lens, then maybe those sectors have been hit, and the condo market in Toronto is not doing well either. Okay. The condo market in Toronto isn't all that healthy as a pocket. I don't know if that's not healthy is an accurate way of describing it, or on its deathbed, or
Well, okay, on its deathbed might be a bit extreme. I'd say
maybe
it's sick. It's sick. It's got a persistent sickness. As you said that you coughed. It's got kind of like a lingering cough, and nobody wants to get too close to it right now because that cough is a little bit alarming.
So it's not like a festering leg wound. It's more of just a persistent cough.
I guess time will tell, but I would lean more towards the side of things will be okay, but it might be kind of a messier couple of years here. And then this kind of feeds into the other part of that prediction that long term, you're not going to see substantial growth in real estate in Canada, in my opinion. And that's because we pulled forward so much of that growth to the first couple decades of the century here.
Yeah, and I think this is a good time for a disclosure that, this is not again, there are going to be pockets that behave radically different. So to take, real estate's going to be okay as support for purchasing any piece of real estate anywhere in Canada under any circumstances is not what that comment is meant to back up. There's still some very, very volatile pieces, and it's very situation dependent, very location dependent.
Yeah, for sure. So changing gears, number 3, third prediction was that Bitcoin would trade at a higher price than at any point in 2023 and at a lower price than at any point in 2023. So the first part of this was obviously has come true. Bitcoin's basically hit new highs throughout the year. The second part of this didn't come anywhere close to coming true because it basically just went, for the most part, up and up and up throughout the calendar year.
Well, when we recorded it, though, it had dropped. Like that day, you had made a comment on that podcast that as we recorded, you thought we had already, successfully, for that day anyway, maybe it's an intraday number, was lower that day.
No, we had actually successfully already hit new highs when we recorded. So we never even came close to hitting new lows or lower points than 2023 this year. Yeah. And I think Bitcoin continues to behave much like a risk asset in my mind. So risk assets this year, stock markets, cryptocurrencies, whatever other things you want to throw into that bucket, have gone kind of one direction all year, and that's up. And there hasn't been a lot of volatility. It's been a very low volatility year, very stable year from that perspective. So there was not really the environment that I expected, with a little bit more volatility that would have led to potentially Bitcoin hitting lower points.
I guess I bristle a little bit at classifying it as an asset. Are lottery tickets an asset, Josh? I mean,
technically, I would say yes.
Wow. Okay,
but,
I'm gonna go back to accounting school because I'm pretty sure.
Well, to me, an asset is something that has value. A lottery ticket does have value, but you wouldn't want to pay what you're actually paying for a lottery ticket, because your expected value on that would be negative. And that could be much the same as Bitcoin. It's worth something right now.
And it's interesting because that was probably one of the weaker ass kind of predictions you could have made on Bitcoin last year. I mean, it was, that's not really much of a prediction. And even that we got wrong. So
yeah, it was a weak ass prediction. That's a fair comment for sure.
Because sure, it's going to trade higher and lower. Why? Because that's what things do. They go higher and lower. And the fact that even that was wrong, just is the fragility of making these kind of predictions. So listener, be warned.
Yeah. All right, my next one does not look like it's going to come true. It's December 19th right now, so we still have 12 days, but it's highly unlikely, I would say, at this point. I said bonds will outperform last year's return. So in 2023, bonds had about a 6.7% return. And as we sit here today, we're probably roughly 3 to 4% or so. And this was the Canadian aggregate bond market specifically. So bonds have done okay this year, but I would have expected a little bit more of a decline in the longer term interest rates, and that just hasn't happened.
Well, yeah, so I was going to ask as to what has led to that. Is this, the vertictness of the yield curve that is the interesting part that's influenced this, or more where the overnight rate got to over the year? Which of those was a bigger contributor to you, do you think, to this outcome?
Well, I think the fact that inflation, as we predicted at the outset, inflation coming down, that's actually happened pretty much exactly or very similar to what we had predicted or what we had thought coming into the year. But what hasn't happened is a more material weakness in growth, I guess. The growth environment has stayed okay in Canada, and the employment picture has remained okay. The economic picture at large has remained okay, and that's kept longer term interest rates a little bit more anchored than I probably would have expected coming into the year. We did have 3 months ago, this prediction was looking really, really good because interest rates had come down quite a bit. But the last few months, as economies maybe have shored up a little bit, or at least that's what the data is showing us, interest rates have spiked up a little bit again, and that's kind of eroded some of the gains that we got from lower interest rates.
Well, the no lending.
It's kind of where we're at right now, it seems, especially with some of the data coming out earlier this week out of the US. Part of this is I think if Canada was its own world, that maybe we would have seen this prediction play out. But Canada is influenced, obviously, by a lot of other economies around the world, the US being one of them. And the US economy's held up reasonably well this year, maybe even better than reasonably well. Maybe even you could say it's good or very good. And that has, I think, anchored Canadian interest rates to some extent as well. None of this stuff exists in a vacuum.
Well, yeah, and there you go. You're shining a light on something that's very important. I mean, we've made the case, and we continue to believe that Canada is in a relatively weaker spot to the U.S. for sure. But that doesn't mean it's weak, because Big Brother's going to drag us to the party. Whether we have the ability to get there on our own or not. And now, what exactly that look like is to be determined. But it's very much the case that nothing exists in a vacuum. None of these predictions existed in a vacuum.
Yeah, and we try our best to consider every one of the variables, but it's just a little bit hard to do that, believe it or not.
Maybe impossible. I don't know. Just throwing it out there.
Yeah. All right. Number 5 was that the Magnificent Seven will decline as a percentage of the S&P 500. So yeah, totally wrong. Totally wrong. And this was wrong like immediately in the year too, because they just skyrocketed, especially in the first 6 months of the year. So the number that I had, the Magnificent Seven made up about 28% of the S&P 500 as of December 2023. That means that the market, the U.S. stock market, is very concentrated, very dominated by a handful of very large companies. But that's got even more extreme throughout this calendar year. As of the end of October, those 7 stocks were over 31% of the S&P 500. And so the big just keep on getting bigger.
Well, I mean, they've almost approached Nortel stage, as far as market dominance. I mean, one company did that in Canada. So, I mean,
I know. They still got a long way to go.
But I'm going to challenge you just for a second, Josh. It didn't turn out the way we expected, for sure. Were you wrong to say that at that time, based on what was known at that time? No, I'm not going to call you wrong, and I'm not going to call myself wrong. I agreed with you. I mean, I think based on any rational thought, based on any person who thinks the world is rooted in reality, that was the right thing to say. Now, it didn't turn out, but it is accurate to say that you can commit no errors and still lose the game. And I think that absolutely is the case here, because there was, and we weren't the only ones who were calling it. I was just on the another podcast, and they were talking about their predictions early last year, and there was a couple of people on there about the peaking of the Magnificent Seven, because any rational person doing math is going to go, well, no, there's no way this can go higher. We're running out of runway. But the market can remain irrational, longer than you can remain liquid. So that's why you don't place bets on stuff like that, right?
Yeah. Well, that's for sure. What we're doing right now has the full benefit of hindsight,
Yeah.
and we can look back and define for sure whether we were right or wrong about what we predicted. That doesn't mean we were right or wrong to make that prediction at the time, because as we always do when we're investing, we're taking the information that we have today and making a thoughtful, calculated prediction about the future. But that doesn't mean that it's going to play out the right way, the way that we think it's going to play out. This next one here, I think, is I'd say without a doubt we can say has come to be. AI will take another leap forward this year.
I am going to argue contrary to that, but please do continue.
Okay, so let me hear your contrary argument. So you don't think AI has taken another leap this year? Is that what you're saying?
I think it is disappointed this year. It has not taken the expected leap. In fact, it has proven to be a little frail. And you can take a look at, the precedent that was quoted in court that was made up by AI, to the advice to use super glue to glue your pepperoni to a pizza, to, all of the different hallucinations that are out there. And I think there's way more suspicion over the quality of AI output now than there was a year ago. I think it's, some of the shine is off the rose, and people are a little more suspicious about AI output at this point than they were last year. For it to have taken a giant leap forward, I would think that people would be relying on it and more confident in it at this moment. But certainly personally, I am not as confident in it as I was a year ago. I know more about it now, but once you know more about something, then it's like, oh, this isn't a flying car. This is just a car that looks like a flying car. Like this isn't a hoverboard. It's got wires holding it up. I mean, it's not as magic as maybe people thought about it a year ago. So it hasn't lived up to the hype as I was interpreting the hype a year ago.
Interesting. Yeah, I think my opinion is slightly different than yours. I think that I was suspicious last year, and I continue to have some suspicion. I don't think at any point I've thought this is like a finished product that's ready to replace all of human thought. So the leaps that I have seen this year, I think the models generally have continued to improve. Are they still flawed? Yes. But have they continued to improve? Yes. And I think in a mostly meaningful way. There's become more democratic access to some of these models, and not just the GPT type models, but video generation and image generation and those types of things. I think more people continue to adopt AI as a useful tool in their daily lives. I don't think it's widespread or mainstream by any means yet, but I think it's fairly widely adopted. And I continue to find new cases that are interesting, and ways where AI can deliver things above my expectations still. I'm still surprised in a positive way some of the things that AI can do, and that's why I would characterize it. Maybe it's not a large leap forward, but I would still say
this is what I was going to go back and say. Where's the giant leap in there? Like everything you're talking about seems to be incremental, and I absolutely will give it incremental. But the expectation and I was agreeing with you that we would see a giant leap forward. I can't look back and say there was the leap. I'm hearing more interesting use case scenarios about it. I heard, somebody talking about how it's the death of Hollywood because they can turn out a movie without any actors now and have it like way higher quality than what animation is. And, again, I'm hearing all these stories, but I'm not seeing it, just bumping into it on the street. So and maybe it's unreasonable to be looking for a giant leap at this point. Maybe the giant leap has happened, like the giant leap. We have an internet now. Okay, that was the giant leap. Then each year, another couple 100,000 or a couple million people get access to it, and it gradually, seeps across the planet and changes the world. But there's very little in there that I think would be described as a giant leap, unless you're a nerd really paying attention to everything really, really closely.
Yeah, I would also say that the investment environment around AI has continued to, I would say, exceed expectations. Like it's been still very much a boom environment for AI adjacent companies.
Yeah, see, I think that's an important distinction to make. Like, I think that the adjacent companies, the NVIDIAs of the world, are the ones that I've seen getting a lot of the traction and doing well. I still think a lot of the use case scenarios, companies that are founded on the uses of AI, um, are not getting the same kind of traction, and there's not the same winners and losers from what I've seen anyway.
So moving on, but staying on the hype train, I had predicted that healthcare will be on the hype train this year, and that included pharma, biotech, drug-related things, and GLP-1s. And I'd say this is a pretty big miss. I don't think that the pharma space came anywhere close to the hype train that I thought we were going to be on. There were some pockets. I think people are somewhat aware of some of the breakthroughs that we've had in drugs, specifically with these GLP-1 drugs over the past couple of years, but it hasn't quite hit the level of notoriety, I guess, that I would have expected.
Yeah, I think that there's two different things when you talk about pharma and the medical field in general. Number one is the efficacy and the improvement of treatments and rolling things out. And the second is the financial result of that. I do think that the nerds are winning. I mean, AIDS doesn't kill people anymore. There wasn't a big, we didn't have a big thing on an aircraft carrier, mission accomplished. Just gradually AIDS stopped killing people. Outcomes for cancer treatment are getting better incrementally. And some of that is stuff that was believed to be really firmly entrenched 5 or 10 years ago, which now we're able to push back the barriers and stuff like that. So I've seen a lot of anecdotal stories about the progress there. I think what's missing is enough people noticing and assigning any kind of magnitude to it, because frankly, it's complicated. It's nuanced. It's difficult to get in and consume that information and then understand the playing field it's on and go, oh, wait, this is a big idea. That's a lot of work. And, I got other things to do with my Saturday. So I think that's part of what's in that space is, your nerd is showing, Josh.
And that could be it. I kind of thought this would be more running in parallel with the AI hype train. Like everybody talks about AI. It's a very big buzzword, but I think a lot fewer people are talking about what I think is a pretty profound, potentially breakthrough with these GLP-1 drugs. Like I heard earlier this week that they're starting to test this for treatment of addictions like drug and alcohol abuse, which could have an incredible effect on the world.
Immeasurable, yeah.
So but that doesn't, nobody's talking about that. Nobody's talking about that. And my thought was that it would be a lot more talked about now than it is. So maybe this is just going to be something that has a huge, profound leap and it just flies under the radar, or maybe it's just going to take more time for it to build. But I actually think in 23, I heard a lot more about this than in 2024. So it's actually taken a step back in my mind. So it hasn't come anywhere close to what I thought it was going to have an impact in like, pop culture or the general population.
Well, I think it's a little bit like back to our Bank of Canada conversation about how they didn't stand on the mountaintop and pound their chest over beating inflation. They just went on to worry about the next thing. That is the human condition. Like, we're worried about this. It's not a problem. Okay, well, I'm going to worry about something else now. But the really fascinating thing for me, and I'll steal this from our next podcast be talking about, you add pharma to AI to quantum computing and begin to start to think about what could become possible in our lifetime. That's where it really is mind-blowing, because if you take those three fields and put them together and how they're interrelated, if we're smart enough to point the quantum computing and AI at the right target and give it the right guidance, we could get somewhere if we're smart enough.
And that remains to be seen. So something where we're not very smart, but our prediction, I think, was probably on point. We said at least one novel investment product will launch at exactly the wrong time throughout the year. And you had actually said it's not just going to be one for the entire year, it's probably going to be one per quarter. Do you think, are there ones that you can put your finger on specifically that you think launched at exactly the wrong time?
Well, I think there was a novel investment product that launched. Now, I guess I won't call it the wrong time. It was a stupid product, but it worked. The single stock ETFs became big this year,
Yeah.
and now many of them picked Nvidia as the single stock, so they did okay. But I haven't gone back and looked at them recently. But the call that they wrote on them, I think, probably stripped a lot of the
Yeah.
value uh, out of just investing in the company. So
Yeah.
I think that slapping an AI sticker on a bunch of stuff was probably the biggest novel idea I saw for the year. And then when you dug under the hood, like, what's AI about this? Or
Yeah.
how is this a product? And why are you charging 40 basis points for this? Right.
Yeah. Yeah. No, that I think the closest one I would say that was a abject failure from 2024 was those single stock covered call ETFs, because they put a call on a highly volatile position, and all that position did was go straight up. So
Yeah.
you've basically capped your upside with something that should, in my opinion, be bought specifically for the upside. So that one seems to, I don't think it's not like people blew up their money, but they definitely left a lot of money on the table by going down this path.
Well, one thing I was thinking about this morning as I walked in the office, actually, and live in real time, Josh, I'm going to ask you this question. It seems to me that I am seeing less promotion and less interest and less traction in the private equity offerings that are being pushed to the public. Is that just because my news feed has gone quiet, or do you think that that wave had crested earlier this year with the preponderance of new things that are coming out? Is that something you've noticed?
I think the private equity hype train is alive and well. And I say this because I get reached out to probably every 2 days to once per week by a private equity manager wanting to talk to me about their product. So I don't think that's diminished or died at all this year. If anything, through the latter half of the year, I think it's actually increased. Um, I don't know in terms of fund flows what's going into the private equity stuff. They might have taken a bit of a backseat because public equities have done so well this year. But there certainly is no shortage of people that want to pitch their product to us to put
Yeah.
our investors' money in this type of thing.
Yeah, no, and you make a good point. I mean, maybe it's getting less traction. Maybe they're having to push harder because, as you said, the public markets, you can do so what you have done so well. I mean,
Yeah.
there's a recency bias to that. Even the wild projections coming out of some of the private equity guys pale in comparison to the reality of what's been achievable in the public markets. Now, of course, we will let everybody know in the next podcast what they can expect for 2025. So I don't want to steal our thunder. But the future does not have to equal the past.
Right, right. And I do have a special ETF product to make a prediction on for 2025. I think you'll like it.
I can't wait.
Yeah. So the last thing that you predicted earlier this year was that there will be something that happens this year that no one will predict. So what was it? What happened this year that you think was totally unpredicted?
I think what caught everybody flat-footed was the expansion of the geopolitical conflict in and around Israel, like Iran and Israel and Lebanon and all of that. I remember clear as day, Iran launched 1,000 drones into Israel, and the oil price went down. And I'm looking at
Yeah.
it going, like, holy shit, this is Armageddon. Like, if you had said to anybody at the beginning of last year that, described the kind and nature and scope of conflict going on around Israel right now and said that the market wouldn't even give a shit, nobody would have listened to you. Nobody would have been think that those two things could exist at the same time. And there are the many out there who've been predicting the imminent sky is going to fall and this war is going to happen because of the tensions in the Middle East. But I didn't see any credible person that I read or was around that was saying, "Hey, this is the year, and here are the reasons why." So that's one of the more recent things that played out that really had me confounded on both sides. The magnitude and size of it and the complete lack of interest the global economy seems to be paying to it.
Yeah. Yeah, I actually think 2024 has been a fairly predictable year, maybe. I don't know if predictable is the right word, but we haven't had that sort of shock or surprise, I don't think, that was the first incursion of Hamas into Israel, right? That
Yeah,
was truly out of
yeah.
nowhere. The COVID pandemic in 2020,
Russia going
the
into Ukraine.
Russian in Ukraine in 2022, the spike of inflation up to high single digit percentages in 2022. So there, I'd say 2024 was kind of boring from that
Do-
perspective.
Whoa, wait. Donald Trump won an election. Now, we can't say nobody saw that coming because, well, there's a group of
Yeah.
diehards who always see it coming. But I think that's going to have to go into the surprising category.
That cannot be a surprise. That there's no possible way that could be a surprise. First of all, he was a favorite to win the election for the last 8 or 9 months. Second of all, he's already won an election. So anybody who's surprised by this outcome needs to give their head a shake because it was a surprise last time. It shouldn't have been a surprise again.
Josh.Sheluk@Verecan.com for anybody who wants to make a cut.
Yeah. Yeah. Send me the email, so I'm happy to field them.
Wow. Yeah, you're right. I mean, 2024 was kind of a consolidation year a little bit. I I don't want to lean back on it too much, but I think this is the first full complete calendar year that I can say, other than people who graduated out of university who came into the workforce during COVID or are wandering around like a fucking deer lost in the forest, other than that cohort of people, everything else was pretty much status normal. Like, everybody's back to flying, everybody's back to going out, the conferences are all back
Yeah.
on schedule. Like, the world's gotten back to pre-COVID. Now we're carrying with us, like I said, a cohort of people who don't know what pre-COVID was, and we're still working with them. We're getting them some therapy, we're bringing them along, but it was a bit of a consolidation year. I, I think well, here, let me throw one at you that, like, right in your wheelhouse. Like, we're still waiting for that recession. And I think that
Yeah.
the nerds of the world, if they're being honest, have to be surprised because this has completely exceeded anything that was in. Sorry, I'm gonna ask it as a question. Has this exceeded anything that was in the textbook? Are we now completely and firmly into territory that all of the indicators have failed at a level that has never been recorded before?
I don't think that's the case. I think there have been times in the past where it hasn't worked out exactly the way that we would have expected. It's definitely, let's call it a historical anomaly, but not something that I think is non-existent from a historical perspective. And I think coming into the year, the average expectation would have been that things would be weaker throughout the year, whether you're talking about markets or economics or whatever. But there was still enough optimism, I think, towards the end of 2023 that there were people that would have predicted really good things. So I don't think it was a totally unpredictable outcome. It might not have been like the base case prediction, but I don't think it was totally off base with things either.
And again, I'm asking because I haven't kept track, and I think it's been a couple of months since I've asked you this question. Where the 210 or the 25 inversion, like the yield curve inversion, is that still, like, what magnitude is that at right now?
Yeah, well, so typically we look at the 3-month 10-year for when we're talking about the yield curve. And at times, briefly in the last few months, there has been an uninversion, if you want to call it that, or a version. I don't know if
Aversion.
that's a version, a reversion, something where the long-term
Inverted.
rate was higher than the short-term rate. But that was very brief. For the most part this year, the yield curve has remained inverted. So again, that is one of the indicators that you're talking about that has historically has a pretty good, not perfect, but pretty good, maybe even very good track record of preceding recessions. And that hasn't happened yet. It's been a couple of years since the yield curve first inverted. So we either remain waiting or we will carry on and nothing will happen. And then it will be another one of those incidents where something was triggered that didn't lead to what we expected it to lead to.
We're going to do neither of those things, Josh. We're going to come up with new words. We're going to come up with micro recession. We're going to come up with a vibe session. We're going to come up with all kinds of other words because we need to label things and they need to be a negative story, and so we need to just to focus on the negative. And if we have to make up words, God damn it, we're going to make up words.
Yep. The vibe session is a real thing.
So you can't even say it with a straight face.
Oh, it's crazy, but it's actually it is a real, because if you look at all the consumer surveys, everybody thinks that the economy is in a bad spot and has been for the better part of 2 years, and when it's pretty much grown consistently over that period of time. So I don't know. I guess there's a point where the data can tell you one thing, but if the people are all telling you another, then maybe you have to consider things a little bit differently than you are.
Great argument to get rid of democracy. Not everybody gets a vote.
Well, we'll leave it there and stay tuned for our next podcast where we do some predictions for 2025. I think it should be fun and exciting.
Well, but let me just add a little bit that I think this exercise should drive home to people the dangers about trying to make predictions going forward. Even as weak ass as something is going to go up and down for the year, sometimes can be wrong. So, there's lots of things in the future that we can't know, won't know, but it's fun to talk about. So make sure you take this as entertainment only. If you're breaking a sweat trying to figure out what your financial advisor is talking about, you're not getting the service you need. You probably hate trying to get an answer from them, but you also think moving your accounts will be a headache, and it might be. But working with don'trocktheboatwealthplanning.com or .ru isn't exactly stress-free, is it? Call us. We will demystify the world for you.
For more information on the subject of today's podcast or any other financial topic, please visit us online at verecan.com. That's Verecan.com. There's plenty of information there, or you can reach out to someone on the team. Thanks for listening. Please note, the information provided in this podcast is for general information purposes only. It is not intended as financial, investment, legal, tax, accounting, or other professional advice. Our discussions are not a solicitation to buy or sell any securities or to make any specific investments. Any decisions, based on information contained in this podcast, are the sole responsibility of the listener. We strongly advise consulting with a professional financial advisor before making any financial decisions. Listeners should be aware that investing involves risks and that past performance is not indicative of future results. Barenaked Money is produced by Verecan Capital Management, Inc., a licensed portfolio management company in Canada. We operate under the regulatory framework established by the provincial securities commissions in the provinces within which we operate. The views expressed in the podcast are our own and do not necessarily reflect the official policy or position of any regulatory authority. Remember, at Verecan Capital Management, Inc., we focus on aligning our goals with yours, prioritizing integrity and transparency. For more information about us and our services, please visit our website. Thank you for listening, and let's continue to challenge the norms of the financial services industry together.